I guess there is a more fundamental story behind it, and based on the discussions we had with our clients and also seen by the research we conducted, at least there's a very clear story around being able to deliver long-term value maximization strategies. And whether you tap into private capital or tap into public equity, we truly believe that you need to have a transformational agenda established and the capabilities on board with your management in order to deliver this. And clearly, many firms have failed in doing that. And there might be now a point where companies understand on how to focus on this much more aggressively down the road.
Mike, does it make a difference around the pricing in the market and in various rounds before they become public companies? I mean, we've seen a shakedown in that area of the market. WeWork was a great example. SoftBank, they're raking over all of its portfolios to come up with more realistic valuations. Does that have a sort of ripple effect on the IPO market down the track, at least for technology?
Well, I guess from a more overall perspective, investors are still very selective and they try to understand where to find growth and growth supporting superior returns. I would expect that down the road, especially for the second half of this year, companies made or will make their homework in understanding how to really convince investors more long-term oriented in delivering superior returns and really making sure that they also show the benefits of a realignment of their business models. So I'm talking about looking into a future benefiting from digitalization now much more aggressively than before the crisis. And we truly believe, and this is also being brought out by the research we conducted, that companies being able to do this kind of communication piece on convincing investors in a much more integrated manner on benefits of their business model, that this will be a winning proposition for companies in the market.
Mike, how do investors read between the lines on these proposals that they're seeing coming to the markets and pick the winners from those that are actually going to lose the money?
I guess there are three elements which became dominant factors in our research. One is the realization that this is less about having an equity story in place, but more a dedicated plan and a set of relevant capabilities in order to deliver to this long-term strategy. This is less about communicating about the equity story per se, but really convincing investors to engage on it in a sustainable manner for many years. Second is the realization that pre- and post-IPO investors are different species, if you will, and companies understanding that post-IPO investors are looking more for a blend of growth and profits at the same time. They will do their homework differently. And last but not least, quite interestingly, our research already also indicated that you need to have not just the technical capabilities being brought in from the outside in order to be ready for an IPO, but also the capabilities and the external support in order to deliver a multi-year strategy. And not many firms were actually able to do that in a very holistic and sustainable manner.